It was another strong day on Wall Street as we saw all major U.S. equity indices to the upside. In fact, the Nasdaq and the Russell 2000 were up each over 1% and very close to all-time highs. Some of that was on the backs of the news that we heard from Janet Yellen and her expectation that they would be throwing lots of money and stimulus towards this coronavirus-impacted economy of ours. And so the market cheered that on. We also started getting some earnings reports out. In fact, after the bell tonight, we did have Netflix come out with their earnings announcement, and that stock was up over 10%. So we'll see what all that means for our posture. Then we're going to get into a trade application example in an area of the market that has been kind of overlooked. In fact, sold off here recently to see if there's maybe a rebound opportunity. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 19th, 2021. First of all, for those of you that are new, remember to go over to YouTube, click subscribe on our channel, then go down to our description area. Make sure you're signed up for our email distribution list, so that way you can be reminded whenever these videos get posted. In addition to that, we're heavy users of Twitter. Make sure you're following me at Brandon Van Zee if you're not doing so already. And we really appreciate those of you that click like and retweet on these Market Outlook related tweets. Last but not least, we do have a presence on Facebook as well. Feel free to join our group at that web address you see embedded in the logo in front of you. All right, let's go ahead and take a look at our charts here. You can see that I've got chart 4B pulled up here. Now, many of you premium members should have received an email from me over the weekend. I did a major overhaul of our charts, and so if you want to be on the current versions of the charts, remember you can always see the dates of the charts up in the upper right-hand corner of our charts to ensure that your charts on your Thinkorswim platform are up to date with the ones that David and I use. So anyway, if you didn't catch that email, maybe go back and check your inbox and make sure you see it there. Anyway, as you can see here with these four different charts, we do have upside action across the board. The S&P 500 was up 0.81% today. We had the Dow Jones Industrial Average up 0.38% today. And then on the bottom portion of these charts is where we had the real strength. NASDAQ Composite was today's leader, up 1.53%. And then we had the Russell 2000 up 1.32%. And you can see both of those were just a stone's throw away from hitting a new all-time high. If we have any sort of bullishness tomorrow morning, which at this moment in time, it's looking pretty likely, at least for the NASDAQ, considering what I had mentioned in the intro with Netflix surging after hours here. If we come over here and take a look at Netflix, you can see it's up to about $563 after hours right now, which is just remarkable. Think about, closing it here today at right around 500. So obviously that's more than a 10% increase there. Can see that the 52-week high on Netflix is $575. And so we're only about $12 away from hitting all-time highs on Netflix after it kind of seemed like it was taking a little bit of a breather here in the last half a year or so. So we'll see what that means, but generally speaking, you'd think that would be a positive sign for the NASDAQ first thing in the morning. So we might very well see an all-time high hit on the NASDAQ tomorrow. And of course, if the Russell 2000 follows suit, it's likely going to hit an all-time high tomorrow as well. So anyway, the good news is we still have bullish postures across the board. In fact, strongly bullish postures. Remember that background color of the chart, when it's dark green, the way that it is right now, tells us that we have a strongly bullish posture according to the market forecast technical indicator, specifically the intermediate line on the market forecast. And remember, it's not perfect, just like there is no perfect technical indicator out there, but it does a reasonably good job. And all you have to do is look at these charts in front of you to understand that, because as you can see for the last 3 months on each of these charts, the prevailing color has been dark green. And naturally, had you been bullish in this market over the last 3 months, you would have been very thankful for that. So anyway, I think it's working pretty well right now, and we're happy for that. Let's go ahead and take a look at our 3 green arrows setup, and that will be chart 4D. So when we're pulling that up, you can see it's a little bit of a different picture here. We don't have so much resiliency in this particular view. The only chart that has a 3 green arrow signal right now is the Russell 2000. You can see that light green background color signifies that we have a green arrow on the moving average, a green arrow on the MACD histogram and a green arrow on the stochastics here at this moment in time, identifying strongly bullish considerations for those technical indicators right there. The other ones, we've got a little bit more of a mixed bag. We've got a mix of green and red arrows, and so it's not quite as clear cut. Obviously, the path of least resistance continues to be to the upside, but you just don't have as much momentum in some of those other areas, right? The MACD histogram, it has a red arrow on those other three charts, so that's kind of the culprit. That's the reason they don't have three green arrows. It's the MACD histogram, and remember the MACD histogram is designed to tell us about momentum. And so while the market has been kind of coasting higher, it hasn't been rocketing higher. Now, there's certainly some areas of the market that are. In fact, let me go ahead and transition our thoughts here over to chart 5A. This will be our asset class 12 grid. And you can see this chart over to the right-hand side here in the middle rung is Bitcoin. And obviously, Bitcoin is absolutely erupting higher. It's up 211% in the last 3 months. And so, there are some areas that have a lot of momentum, a lot of oomph right now, but it's not necessarily a broad-based index that is receiving that. It's mostly some unique one-off types of assets. And in fact, speaking of which, some of you that took my trade application example from my video on Thursday with a cryptocurrency, Ethereum. Hopefully you are happy about that decision. Ethereum went up. We've already liquidated our holding. It was up 20% earlier this morning where we locked in maximum gain on that swing trade. It finished up about 17% when it was all said and done. So that was actually the very first time I've ever done a pure cryptocurrency trade. And so I'm very happy that it had the end result that it did, because that's the type of thing that you could end up with some egg on your face. So anyway, happy to see that. Perhaps I'll have to keep my eye on some more of those cryptocurrency types of plays again in the future to see if you guys can benefit from that. Anyway, when we're over here on chart 5A, you can see that we've got a lot of green charts on the board. One that I wanted to point out was up here at the top, emerging markets are really having quite the run of things. You can see that we were up another 1.66% today. Take a look at the 3-month performance on emerging markets, 21% to the upside. Wow. In comparison, take a look at the S&P 500. S&P 500's had an amazing run of 10%. Remember, your annualized gains that you should expect out of the stock market over the long haul are 8 to 10% annualized. So to have 10% in just 3 months, after a stellar run that we had in the market earlier in 2020, of course after the coronavirus, nonetheless, that's a good run in just 3 months' time. And then you double it to see what's going on with the emerging markets. There's some really nice looking stocks over there. In fact, I was looking at one of them here today. We don't own this one anymore in my Monday class, but we used to. It's NetEase. And we had a really nice bounce out of NetEase there. So some of you that are looking for swing trades, you're kind of breaking out of a flag type of a pattern right there. NTES was up nearly 5% today and is showing some really good strength right there. So emerging markets, including China, they're ramping higher right now. EFA had a decent day as well, which is the developed foreign markets. They were up 0.73%. Now remember, when we talk about those foreign securities, oftentimes it revolves around the conversation of what is going on with the US dollar right now. And as you can see right here, the US dollar was down today, so that helps support things like commodities and foreign securities. And we certainly see that out of the EEM here today, along with gold and oil. You can see gold was up 0.85% today, and we saw oil was up 1.16% today. Now, those two charts do look entirely different from one another, despite both of them being up here today. Gold still has a lot of work to do, and that's not a new story. Those of you that have been listening to this presentation for the last several months know that we've been kind of waiting for it to break in one direction or another, either up or down, and instead it just chose to kind of chop and slop sideways. Over the last 3 months, it's down 3%, which is basically a non-event for most trades. On the other hand, oil has been absolutely ripping higher. You can see here that, at least judging by USO, it's not a pure proxy for an oil contract, but it's close enough. It'll give us a good sense of what's going on with oil, and it's up 25% in the last 3 months. So a really strong performance right there. We did have long-term treasuries up today, and of course the opposite being true, treasury yields being down today. But I wouldn't read too much into that. I think those trends are still in place. In other words, the trend of long-term U.S. government bonds is down in price and up in yield. And until we start seeing some breaks of support or resistance that tell me otherwise, I'm going to assume that that is going to continue with, of course, some give back along the way, which is going to always be the case. Remember, securities don't go straight up or straight down. There's always the back and filling concept that needs to be taken into consideration as well. You can see that high yield bonds are doing quite well. Now, you guys have heard me discuss that concept in the past, that in this current era, a lot of junk bonds are closely linked to oil prices. Every era is a little bit different. Remember, the junk bond market is where corporations go to raise high-cost capital. Now, do they want to raise high-cost capital? Of course not. They're doing so because oftentimes they have to. And so they're corporations that are on the brink in many cases. And so it's a more dangerous part of the fixed income market to be kind of fishing in. And so when we do have a rebound in oil, like we have here in the last 3 months, that is going to give junk bonds an added benefit that you wouldn't normally have. And remember, that wasn't the case last year when oil prices were doing terribly, but it happens to be the case right now. And so if you do have this hunch that oil prices are going to continue to go higher in the next year or so, junk bonds may be an interesting way to play that. You can see that junk bonds are up about 3.5% over the last 3 months. That does not include any impact of any interest payments or anything like that might have been paid to those bonds, but gives you at least an idea in comparison to what's happened to foreign bonds, which are effectively flat. They're down 0.21% in the last 3 months, but U.S. government bonds are down 5%. That's a really terrible performance for a fixed income asset class like that. So it just kind of goes to show that not everything is created equal in the world of fixed income. And if you're looking for kind of the trending strength right now within fixed income, it is in those high yield junk bonds, mostly because they are so closely linked to oil prices. Let's take a moment here to pop on over to the internet. I just want to say thank you to those of you that help support this presentation. We didn't quite get to my my number that I oftentimes shoot for, triple digits, the last time around. That's too bad. I thought I gave you guys a really good trade setup there with Ethereum up 20% here this morning. Maybe it wasn't good enough. I'll shoot for 25% next time. But in all seriousness, it does help us. And so I know for you it probably feels like, is it really worth my time to take the 5 seconds to click like? It does. It makes a big difference to us. If we start seeing a detraction in that, then we're going to make the assumption that you guys don't care about this presentation, right? And so I know that's not the case for many of you, and many of you are committed to doing it each and every day that David and I take 2-3 hours out of our day to produce this free video for you. All you have to do is click like for free. It's easy. So as long as you're willing to do that, we'll probably be willing to continue to do these videos. If we start seeing the numbers decline in a significant way there, then we'll have to find other uses for our time. So do your best to remember to do that to help support the product every single time. Remember, we don't get paid a single cent to do these YouTube videos, so we're doing it on a volunteer basis, but we do have to have some effort on your guys' side to help support the justification of taking the time out of our busy days as business owners. Thank you, as always. Also, while we're over here, I'll let you know that David did teach his directional option strategies class earlier today. I taught my dividend growth investing class today, where we concentrated on a couple of consumer staple stocks that are very well known and likely have products in all of your guys' home pantries. So if you're interested in that conversation and you're a premium or plus member, pop on up to our trading rooms calendar and check out that recording. Tomorrow I've got my factor-based swing trading class, which last week was an awesome opportunity because our swing trade hit our max gain within one single day, even bettering what we did here with Ethereum. Remember, Ethereum that I did for you guys on Thursday was expected to be a bullish swing trade, and to be in that for just 2 trading sessions is awesome because my expectations on a swing trade is that we're going to be in it for 3 weeks. So to get out in 2 days is great. We even one up that in my swing trading class last Wednesday. We got in a trade Wednesday. We were out on Thursday at max gain. So if you're interested in that kind of shorter term, more active, chart reading, market timing type of a mindset. That's what I try to teach you on Wednesday mornings at 11 a.m. Eastern time. So I'll look forward to seeing many of you there at that time. All right, on the sector selector here, we didn't have class on Monday because of MLK Jr. Day, of course. Stock market wasn't open yesterday, but I did produce a sector selector nonetheless. Remember, you can find that if you're a premium member up here under our tools area. I also updated the stock selector. In the sector selector vein, what I would have discussed in class yesterday had we gathered together is that massive emergence in energy. Of course, energy has been kind of all over the map here in the last couple of months compared to what we were dealing with in 2019 and most of 2020, where energy was pretty much dead last for a long, long period of time. So all of a sudden, you got some life to those oil and gas names. And as I mentioned to you guys in this presentation last week, it seems more legitimate this time. In other words, it hasn't been just a dead cat bounce that rolls over right away again. It is a situation where we've held above the moving averages for quite some time, lending some credibility to the move here. So we'll see where it takes us, but there are some interesting opportunities emerging in that area that had been so beaten up for years. And so keep your eyes open to that possibility there. We also saw the financials pop back up into the number 3 slot there last week as well. So some of those banks, of course, making nice moves here recently, and they're in the thick of it for earnings season right here, right now. I know Goldman Sachs already came out with their earnings, and a few others did as well. Let's go ahead and pop on over to the Thinkorswim platform again, and let's take a look at our sectors. Our sectors from our perspective here, from the market cap weighted perspective, and that's another thing I should mention. Remember, on our charts for my top-down trend trading class, where we also do sector analysis, we have, I think it's 8 charts to work with now. And so that equal weighted sector 12 grid that I used to kind of put over there in the 4s, I've kind of swapped on over here to the 1s right now, along with our sector selector and some of our ratio charts and some of these other things that we work with in that class. It just seemed to be a little bit more appropriate in that area. But over here in the market outlook video, we tend to focus on the market cap weighted concept there a little bit more. So when you look at chart 5C right here, this is the normal kind of market cap weighted one, the one that you guys are a little bit more familiar with in all likelihood. So when we're looking at this here, you can see it's a little bit of a mixed bag. Most of the charts are green, which makes sense. Remember that the S&P 500 itself is green. And so, when the overall index is green, typically most of the sectors are going to be as well. That is the case right now. Most of them, in fact, are darker shades of green, which is even better. Those are strongly bullish charts. We do have communications and real estate as that lighter green color right there, telling us that we have a weekly bullish posture. We talked about communications last week a bit when Twitter and Facebook and some of those social media stocks were falling out of favor, but they've had a nice rip back higher here today. And like I said, with Netflix coming out the way that they did, don't be surprised if some of those communication stocks start popping again tomorrow as well, which would be very good timing for their perspective, because right now, notice where they've placed themselves on XLC right here. You had a shot in the arm to the upside here today, so it was up 1.8%, but you're resting just on the underside of that falling 30-day moving average. A lot of times that's where I'm going to start having a little bit of nerves as a trader, because I'm going to assume they're going to use that as a resistance area, and we're going to bounce down and away from that from a bearish bounce perspective. But with the news about Netflix tonight, I think it's got a pretty decent chance of pushing up and through that moving average. Then again, we've seen plenty of times where key stocks come out with earnings. Everything looks wonderful from an after-hours perspective, but by the time the liquidity and the real money hits the market the following day, the tune changes a bit. So we've got to be careful on that, but right now it's looking good. In fact, you can kind of see it right here. I know it's probably hard for those of you that have small monitors, but I'll just read it to you, that the bid price on XLC right now is $67 even, and then the ask price is $67.12. So in other words, we're at least 53 cents higher in the after hours session than where this thing closed. And remember, this holds dozens of communication stocks in there. So again, I think that's the Netflix effect that we are seeing taking place right there within kind of those communications oriented stocks. Other things that kind of caught my eye here today, I want to show you down below here. This is one that I must admit kind of caught me a little bit by surprise. Healthcare. We don't talk a lot about it because there's just been more exciting places to hang out, but all of a sudden, healthcare is making a move. Let me right click. Let's maximize that. And I'll show you that for a very brief moment in time, you hit a new high today. I'm pretty sure that was an all-time high. We didn't necessarily close there because this candle over here closed at 117.94. So we actually closed about 9 cents lower than the close on that candle. But on an intraday basis, we actually slightly outpaced the intraday high on that candle over there. Obviously, a strongly bullish posture here on healthcare with the green line clearly in the upper reversal zone. Let me pop back on over here to a longer term view. I just want to see if this is an all-time high. I think it is, but I don't want to give you the wrong information. So let's take a look at a 1-year view. Yeah, it is. So that's kind of interesting. In fact, we were having that conversation today with my class to a degree, and some of you saw me tweeting about it this morning as well with Gilead. Now, it's not that Gilead represents healthcare right now. It's just kind of an interesting situation where you went from way oversold clusters right here with these 3 dots popping up here to at one point this morning when I took the screenshot and posted it to Twitter, it actually had an overbought cluster signal. There was a red dot above the candle, but it did pull back at some point later in the day, and that those lines did not close in the upper reversal zone there. But you don't see that type of a reversal all that often, and goes to show you that in some patches within the healthcare market, there's some real strength out there. So even if it's not kind of the eye-catching type of stuff that we've been looking at with technology and materials and some of those discretionary stocks, don't count them out. I know sometimes the fear is that with a Democrat in the White House, which we'll see as soon as tomorrow, hopefully. Not hopefully because I'm political, but hopefully because there's nothing major going on in terms of protests and riots and other unexpected things from the market's perspective. But hopefully, as long as democracy continues to push forward as we expect, there's going to be a change in the White House. And typically the mindset around that is that Democrats are worse for healthcare. They generally are going to be a little bit more strict on drug pricing and things like that. But right now, we're not getting that feel out of healthcare related stocks. Maybe that will kick in. Maybe it's just a delayed reaction. Who knows? But right now, what I can say is that looking at XLV has kind of caught my attention all of a sudden, because I know for myself, I haven't even been talking about it a whole lot. You guys see me tweeting about CRISPR and a few of those one-off healthcare companies fairly regularly, but I haven't been talking about the sector in general. And this sector actually looks pretty strong. I mean, if you look at this chart, it's a pretty robust chart that we're looking at here. So, keep your eye on some of those sneaky healthcare plays in there as well. But today's big winner was energy. So energy was up over 2% today. It was the only sector that was up over 2% today. Naturally, it keeps its dark green background color, telling us that we've got a strongly bullish posture to kind of match what we already saw there just a moment ago on the sector selector that I was showing you as well, where it also is considered number one from a kind of a more intermediate term perspective there. Now, I did want to talk about some of the areas that were struggling a little bit more here as well. We have technology, surprisingly, with a light pink background color. You can see that the intermediate line on the market forecast is at 71 and falling. Remember, if it's below 80 and falling, we consider that bearish. If it hasn't crossed 50 yet and it's falling, then in that case it would be weakly bearish, and that's where we find ourselves with technology. So it's not something that you're going to bet the farm on to say that it's going to melt down here or anything along those lines. It's just kind of a early heads up, kind of like storm clouds that come in. Sometimes the storm clouds will lead to actual storms. Sometimes they'll just blow away and you'll have clear skies ahead. So right now, think of that light pink background color as your storm clouds, letting you know that there's a little bit of turbulence out there, but it's not one of those things where you make major knee-jerk reactions to your portfolio quite yet. And I would probably say the same thing with industrials. Now, those two kind of share one commonality, which is they're both trading above rising 30-day moving averages. Notice the moving averages themselves are green. And so despite the pink background color telling us the posture is weakly bearish, the path of least resistance likely continues to be to the upside for both of them until we start seeing support breaks somewhere. And right now we don't have that. That leads me to my final topic here on the sector basis, which is staples down below. Staples have just kind of been out of sync with the rest of the market. And that's part of the reason we talked about the staples today in my dividend growth investing class, and we did so a couple of weeks ago as well. Remember, in my top-down trend trading class that I teach on Mondays, there we are looking for whatever the strongest stocks and the strongest sectors are. In my dividend growth investing mentality, we're trying to buy high-quality merchandise on the cheap. So oftentimes that's a 180-degree difference as far as the types of charts and stocks we're looking at. So anyway, right now happens to be a time for those of you that are dividend-oriented investors to be kind of going through the sale bin, so to speak, and see what sort of opportunities emerge. And like I said, if you're looking for names for that and you're a premium or a plus member, I covered what I consider to be two very high-quality blue-chip companies today, and I think both of them are appropriate for long-term investors right here. But one thing I wanted to point out specifically from a technical analysis perspective in tonight's YouTube video here is that the staples have now fallen off so much, they actually have an oversold cluster signal. It's kind of rare, right? The idea that you're having one sector that's so out of favor that you actually have oversold cluster signals when a lot of the other markets are, close to all-time highs, right? Well, like we talked about with healthcare today, and even the S&P 500 itself is close to all-time highs. So, again, the concept is the S&P 500 represents all 11 sectors. If the S&P 500 is close to all-time highs, it's kind of weird to have one of those 11 sectors that make it up be doing so poorly that it's actually showing us oversold cluster signals. And I prefer the oversold ones personally than the overbought ones. My research has suggested that the overbought ones are about a coin flip, quite frankly, in terms of whether they'll revert to the mean or not. Whereas I've seen much bigger percentages, not a guarantee, of course, there is no such thing in this business, but I've seen much higher percentages of success when it comes to the mindset of reversion to the mean when it comes to oversold cluster signals like we have right now appearing on the staples chart here today. So I wanted to kind of tap into that mindset with a fairly well-known consumer staples company that also has an oversold cluster signal. And for that, I guess I could just pull up markets forecast chart here for A, and I'm going to pull up Costco. Costco is one of Charlie Munger's favorite companies, even though Berkshire Hathaway itself sold off its shares in Costco. But naturally, many of you are aware Costco has been an epic success story here in the United States. Now, every company goes through its growing pains up and down on the charts, but right now happens to be one of those downswings for Costco. It's kind of performing in line with what we saw with the consumer staples sector itself. In other words, we had such a violent sell-off here in recent weeks that we actually have an oversold cluster signal on Costco as well. Just to catch everybody up to speed there, an oversold cluster signal is when all three of those market forecast lines show up in the lower reversal zone at the close of any single day or bar that you're looking at on that chart. And so in this case, we've got the blue, we've got the green, and we've got the red all clustered up here in that lower reversal zone, producing that oversold cluster signal, which produces those little green dots on our chart setup that we have here. And so what I'm looking for in this is not necessarily a reversal to go right back to all-time highs. Now, I do have faith that Costco will eventually hit an all-time high again. It's still a very, very powerful company. And despite it kind of past its uber growth phase, it's going to be still a big-time player in retailing in the United States in coming decades, I have a feeling at least. And so, at some point it's going to hit an all-time high. Is it the bet that if I were forced to make it, I would make? However, that's not the bet I'm making here. Right here, I'm just making a bet that says this meltdown, or not even a meltdown, but sell-off is going to slow. And how it's going to slow, I don't know. Is it going to revert to the mean by bouncing from this level higher? That's entirely possible now that we've got that oversold cluster signal. Is it going to just kind of cool off by going sideways? That's entirely possible as well. Does it just kind of drift a little bit lower? Now that's possible as well. Remember that the oversold cluster signal does not guarantee that it can't keep going lower. It's mostly telling you that it's probably not going to go lower at the same pace that it did to get it into the signal in the first place. So if we had kind of a measured move from right here to right here, and then we said, where do we think this stock will be in the next 2 or 3 weeks? Is it going to make that kind of a move again on top of that already strong move? I don't think so. And so the bet that I'm going to make here in this case is what's known as a bull put spread. Part of the reason I was attracted to this particular stock is that it's kind of off cycle in terms of its earnings. They reported their earnings here just in December. So unlike a lot of other companies who have their earnings coming up here in the next few weeks, this one does not, and therefore it opened up the opportunity for me to trade the February contracts without having to worry about an earnings announcement completely destroying my technical analysis. And so I ended up selling the 342.50 and I bought the 340, so a $2.50 wide credit spread there. And so if you're a premium member, as always, I did the trade before the market was closed, just like I did with Ethereum. So for those of you that had that half an hour to work with to determine whether you wanted to get into the Ethereum trade, that was a very good choice that you made in the end. It's not always going to work that way, but that is a good educational example as to why those of you that are premium members have a benefit over those that are not. You get access to the information sooner than others, and therefore you don't have to wait until the next day to take the trade. And so same thing here. I got the trade done prior to the market close. You can see the trade details there on the Telegram app if you're interested in the execution prices and strikes and different things like that. So that's what I had for you here tonight. Kind of an oversold cluster, hoping for a little bit of a bounce in the coming 3 or 4 weeks out of Costco. We'll see where that brings us. So if you got value out of tonight's video, do me a favor, go over to Twitter, click like. Remember, we make it nice and easy for you. There's actually 4 different places you can click like on Twitter, whether that's directly below the video on our website, where some of you are watching this right now. We have the little Twitter widget there. Whether it's within the email that we send all of you on our email distribution list, there's a link for Twitter within the email itself. Even those of you that watch this directly on YouTube, if you go into the description area, we swap out the Twitter link in there every single time we do the video. So you can click on the link directly there and click like for us as well. And of course, you can always just go over to Twitter directly and you'll find these posted right at the top of David and I's timeline. So thank you for helping support the product here. Remember, it's in your own best interest to do so, because as long as you continue to support it, we'll continue to do it. If you don't continue to support it, then we'll find other things to do. So as I'm sure you guys can imagine. Appreciate your time here tonight. Best of success with your trades and your investments. Goodbye for now.